Hey folks, Dan Frio here with your closing bell for April 14th, 2025. So we had a pretty good market today. We had the Dow Jones and the equity markets green all the way across the board. We had the VIX down 17 ticks. Not saying it's we're out of the woods yet. We're not even close to being out of the woods. But also we had a nice little reaction today to the MBS, up 64 points, bringing those rates down below 7%. So we're going to dissect today what happened. Not sure if President Trump sneezed or burped, but whatever he did, it worked today. So let's get into the details and figure out what in the heck happened today to cause these things to change. So my name is Dan Frio. I do this report actually 2 times a day to inform you guys what's going on with these things. And I have a focus in on real estate because I'm a nationwide mortgage loan officer. I'd love to win your business. If you're out there looking to refinance or maybe buy a home, our slogan here is one application, one credit pool. We're going to shop your loan to over 30 different lenders. How do we do that? I'm going to break that news at the end of this video. So without further ado, let's get to today's news. Let's get over to it. So here's the agenda today. Here's what we're seeing. President Trump came out today and he made a comment about the car industry. Okay, so that's sending the car stocks up. And I don't know if you watched my video Sunday, but I did a live event on Sunday evening, Stock Talk, and we actually talked about steel and how steel might be a good stock or an industry to invest in. So I'm not an investor. I am an investor, but I'm not here to teach you that. Don't trade off of what I'm telling you. I'm not licensed to do that. I just give you my take on what I do behind the scenes for entertainment and educational purposes only. So let's get over to it. Here's what happened, though, behind the scenes right here. Trump aide Hassett says U.S. got amazing tariff deals offered, and there's no recession coming. So the inside track on this is it looks like most countries are reaching out to our country and saying, okay, let's work a deal here. And the headlines are everything, and you have to have the headlines to get you to click and clickbait and things like that. But you're going to hear nothing but recession in China and all this other stuff because they need you to click it. So that's how they get their advertising. But what's good news or piece of good news we had out today was right here. Federal Chairman Waller, he sits on the Federal Reserve and he says, I think we're going to have multiple rate cuts this year as long as the job market and everything stays steady. But the Morgan Stanley down here, they're coming out and saying, don't be fooled by a lot of these things that's taking place. So what's my expectations on all this and how am I expecting or predicting the future when it comes to interest rates and housing? Well, interesting. So let's get into it. So here's my thoughts what's going to happen. Okay, so let's break it down. Here's what's going on in the MBS market. But let's first go over to Steve Leisman. Okay, we want to get the Federal Reserve's take on this before I answer anything. So let's get what he's hearing from the Federal Reserve officials. There was actually 3 of them out today talking, and he's going to talk more about how Waller kind of just a little bit different than the rest of them. So let's get his take and basically what the Federal Reserve's take is on all this tariff stuff going on. Stevie boy, take it away, buddy.
Right now, Steve Leisman, as ever, has the headlines of what he is going to say, what he is saying, what he might say.
Yeah, the Fed Governor Chris Waller says he is looking at 2 scenarios for tariffs, a large one and a small one, but he sees rate cuts under both scenarios. One scenario he said he was modeling or thinking about is one where these big tariffs stay and the average tariff in the U.S. remains 25%. Another one's where there's negotiations and they go down to a still high 10%. He sees tariff inflation effect mostly as temporary in both scenarios. Now let's talk about his large tariff scenario. With large tariffs, he says, I would expect the U.S. economy to slow significantly. Even talks a lot about a recession. If the tariffs threaten a recession, I would expect to favor cutting the FOMC's policy rate sooner than he otherwise had expected to. They'll reduce spending, deter business investment, and, of course, raise unemployment. When unemployment rises, he warns, quote, it often rises significantly. Inflation could hit 5% in this large tariff scenario on an annualized basis. Unemployment also could be around 5%. Recession risks, he said, though, would outweigh inflation risk. He's a little different from some of his colleagues on the FOMC, even the Fed chair on this in his thinking that he would focus on recession risks here. Now, the smaller tariff scenario. In that scenario, the rate cuts could come on the table in the latter half of 2025, again, because he sees this tariff inflation passing through. Peak inflation would be around 3% on an annualized basis. And even the small tariff scenario, though, it would have a negative effect on growth and employment. He supports limited monetary policy response in that scenario, but still rate cuts. New tariff policies, he said, are, quote, one of the biggest shocks to affect the U.S. economy in many decades. And well, just one more thing. We had our CNBC NRF retail monitor this morning. A decent rebound from 2 lousy months shows the consumer not necessarily giving up spending despite that strong decline in sentiment. The big decline in sentiment happened in April. These are March numbers, 0.6 on our headline number, retails and restaurants. Takeout restaurants still 0.4. Not gangbusters, but a decent rebound while we wait to see what the longer effect of these tariffs will be on consumer spending.
I'm going to go back 1 second to where he was. I might mess up the chart. Did you see that? Where spending was up 4 and 5%, and he's saying, that's not bad. That's fantastic in an economy, in a normal economy that we're seeing. So here's my take on what I'm expecting. And maybe you saw me going like this. I'm thinking because President Trump, he's the man of the deal. I mean, he wrote the book. They're going to work out deals, and you're starting to see that right through here in the headlines. Again, Trump aide Hassett says U.S. got amazing tariff deal offers. Recession 100% not happening. So are they, blowing smoke up us or whatever else? I don't think so. I think Trump is a businessman. He focuses in on the economy. He focuses in on the markets. He focuses in on real estate. That's what us, the consumers, have going for us right now. He's not going to let his legacy go that the stock market crashed under a President Trump administration. Ain't going to happen. He's not going to have a real estate crash. He's a real estate tycoon. And you guys might, not agree with what I have to say. You're more than welcome to put your comments down. We'll only go and time's going to tell who's accurate. Go back, if you guys would, do me a huge favor. Go back and see where I've been over the last 2, 3, 4, 5 years. See where my predictions were, my forecasts, I'll say, and how I've done on that. I can say I would say pretty darn well over that whole duration of time. Where I missed is on interest rates. I thought we would have interest rates right now about 6. We're about 7%. So I'm off there, but the rest of it, I didn't predict crashes. I predicted the rest of these things. So here's my thoughts with this is the tariffs are going to be a deal maker. And China, some people are going to rebuke these. They'll finally come to the table. And then there'll be deals made. And they're not going to be, I'm going to say they're not going to be as bad as all the knee-jerk reactions are going to be. So my thinking is short-term again. Short-term is going to be volatile. I'm going to have a live event on Wednesday to help you guys get prepared for what's coming. I don't know what's going to come. So here's what my thoughts are. If you look at where rates have been over the last 2, 3, 4 months, and you're a buyer, rates really haven't moved. And I can show you right through here. Let's go to a 3-month chart. Here's where rates are. Okay, they were right here. And if you could see that right down through here, there's where they opened there. Here's where we are today. So mortgage rates haven't changed. So if you're a buyer, I don't think there's much here to look at. Don't think rates are going to go off the roof like a lot of people are possibly saying. But I don't know how much rates are going to come down. Okay, so you might be in a good situation. When you're getting qualified, use a rate and maybe like 7%. And if the numbers work, God bless you. That might be a situation where you get into. Now, here's for the people that are home buyers or homeowners, they're looking and they keep missing this thing. Because last September, you could have got 6.2. About 30 days ago, you could have got, in the lower 6s in many cases. We even had people down the high 5s with special like VA loans and things like that. And then rates spiked again. Here's what we've basically happened. When this chart goes down, and you can see it, when it goes down, rates are going up. And so it's not a huge move, but this move from here to here, dramatic. And then here's what's happened over since then. So if you locked down here, if you locked last week, you might want to reach out to us to see if we can get you a little bit better rate, because rates have been, when this goes up, rates are getting better. All these orange little dots here are representing of mortgage companies and lenders putting out better rates. So this is also comes into play in what I do for a living. But let's go over to one more piece of this puzzle. I'm going to get, again, short-term, midterm, long-term. Let's look at what the Federal Reserve's predictions are, at least forecasts are for the next, let's say, 6-8 months. And this will take us a little bit further than that, but let's see where it's going. So you can go to the CME FedWatch group or CMEgroup.com. And right through here, it's telling us, it's telling us the Federal Reserve is going to meet in 22 days. When we're scrolling down, I'm going to hit probability right through here. And we're going to scroll down. And what's the probability of what the Federal Reserve is going to do? Well, the Federal Reserve right now, they control what's called the federal funds rate. And that's right over my head. Let me get my head out of the way here for a second. So they control the federal funds rate. The federal funds rate, the rates are across the top right through here. Right now, the federal funds rate is 4.25 to 4.5. Okay, so here's the meeting dates. So the next meeting coming up is May. So there's an 80% prediction or probability they're not going to cut rates. The next meeting now, it's over a 50% probability that they're going to cut rates in June. So this is telling us, okay, well, that's where the Federal Reserve is. There was also a dot plot that was just put out at the last meeting of the last Fed meeting. So what they do is they sit down, Fed officials, they do this 4 times a year and put a dot next to where they expect the federal funds rate to be. And this is basically the rate that they control. Okay, so right now we're right through here. We're at 4.25 to 4.5. Let me bring that in a little bit for you. That's a little bit too much. So right here, as you saw in the previous chart, we're 4.25 to 4.5 right here. Okay, so there's 4 Fed officials saying they're not going to do anything, but the majority of them are saying they're going to cut. This is 1-2 rate cuts most likely coming. Okay, so that's what we're expecting there. So let me get over to what my thoughts are. Again, short term, it's volatile. Use a 7% rate to factor in this to see if you qualify. And that's what I would do. And I would continue to move forward because rates really haven't been that volatile for you. If you're on the sidelines waiting for a refinance, here's what I would do. If you want to continue to call people and put in applications and things like that, do so. But here's what I would suggest, and this rolls over to what I do for a living. My name is Dan Frio, and I do these videos actually twice a day to inform you guys what's going on with rates and real estate and everything else. But here's what we can do for you. You go to our website, and it's therateupdate.com. We have a tool. It's right down through here. It's called RateWatch. Okay, so here's what I would do. You can subscribe to this. You can put in your information. You're going to put in your name, your address, and some other information. If you want me to call you, text you, email you, however you want me to get you, when the rate that you're looking for hits there. So let's say you closed last year at 7.875, and you're waiting for 6.5. And 2 weeks ago, it just got this close, so it didn't get there. Well, maybe get in your application this time, and when it does get there, I can actually call you real quick and say, hey, you want me to lock in? You say, yeah, we lock in and we get the ball rolling. Then you didn't miss it again. So prepare for volatility in the market short term. And even Goldman Sachs, if you go over to here, they're saying, or Morgan Stanley, expect to be fooled many more times on tariffs. So that's what's going to happen. You're going to have major volatility in the markets. Okay, so here's what we do and here's how I do things. And our slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders. Here's what I do. I work at a federal bank, so I'm federally licensed. I'm licensed in all 50 states as well as Puerto Rico. But the cool thing here is, and here's why I'm here, is we're set up with 33 other lenders. So think of it. You calling me is calling a mortgage representative who's licensed all over the country, who has 34 lenders that he's working with. So I can take this or navigate this for you. You don't have to call bank after bank after bank. In this volatility, you might have pick up one day where interest rates drop 0.25% in a day, right in the wheelhouse of saving you much more money than you expected, and you want to lock in and move forward. That's what we can do. So reach out to us. Go to therateupdate.com. You can scroll down. You can see you can schedule a consultation right through here. Right behind me, you can put in your application. You can give us a call. Our 800 number is right there. You can even see a video down here if you're a first-time home buyer and just wanting to navigate all the steps of buying your first house. Check out this video. I think you'll find some value in that as well. So thanks for watching, guys. I hope you found value in today's video. Like I said, I come out every day and give you my short-term, my mid-term, and my long-term forecasts. And here it is. Hopefully you stayed all the way to the end of this video because you're going to get it. Short-term, you're going to be qualifying at 7%, give or take about an 1/8 or 1/4% up or down. Midterm, if you want to look out 6 months or a little bit further, you're going to be about 6.5% on the rates. If you want to go further out, if these tariffs go away like I think they are, and a lot of people come to negotiations, you're going to start seeing our inflation numbers dramatically dropping down. You're going to see what a lot of people aren't talking about right now as well is the national deficit starting to come down as well. It's nothing but good news for me and you and the markets. So long term in the future down the road, I'm predicting about a 6 to 6.25 rate by the end of the year. Could be wrong. Only time's going to tell. Thanks for watching, folks. You stayed till the end. God bless you, and you got a little bonus material. Let the other people know behind down there. Let them know, saying, hey, if you guys stayed till the end, you missed some bonus material. Maybe they'll come back and watch again. So thanks for watching, folks. Take care. See you tomorrow. Bye-bye.